but it's really exciting. I'm really excited about being able to work with more companies. I'm really excited about expanding TinySeed. Like having like multiple rounds at once is going to be an interesting challenge to try to see how that goes. So a lot of it's just kind of like what's going to happen. We're planning as much as possible, but it's also being aware that you could plan all you want. And then we just have to see how things happen. I'm very excited for the future year, and I think it's going to be awesome.
Yeah, it's like any other startup. A lot of the stuff we do are tested experiments based on some intuition, but also some information we have, because we never overlapped 6 months, but our first program overlapped 2 months with the second year, and our second one, I believe, overlapped a month due to COVID or something. So we have had overlap before. Wait, there's a poll up, but hosts and panelists can't vote. I was just about to vote.
I know, right?
I'm curious.
What would you answer, Rob?
Well,
what part of the accelerator program is most valuable to you? Single choice, mentorship, community, or funding?
Well, I'm not going to say it yet because it'll stuff the ballot box, right?
Oh, that's
People
true.
will be like, "Oh, that's the answer." Yeah, I'm curious. Once we see it, the responses, I'm curious for us to weigh in. Mm-hmm. All right, I feel like things are good, and we should probably get rolling. We're a couple minutes in. So welcome everyone to this TinySeed information session. It's great to have you here. And this will be recorded and on YouTube for folks who may not be able to make the entire thing, or if of a friend or founder who's considering, who couldn't make it. It'd be great if you'd pass this along. I am Rob Walling. I'm the co-founder of TinySeed and the co-founder of MicroConf and the host of Startups for the Rest of Us. And I'm really excited to chat through some questions today. And to my right is Tracy Osborne. She is Tracy Makes on Twitter. Tracy, you want to give yourself a couple sentence bio there?
Yeah. Hi, everyone. As mentioned, I'm Tracy. I'm the program director of TinySeed. So I kind of run the day-to-day operations of the program and kind of keep everything rolling and on time, and the lead person for questions and helping founders out and kind of booking events and all that kind of jazz. Previously, I ran a startup called Wedding Lovely, which was shut down after like 8 or 9 or so years. That's a whole story. There's a MicroConf talk I did on that story. But I love entrepreneurship. I'm also a author, self-published author of one book. And then I'm also, my most recent book, Hello Web Design, has come out, was published by No Starch Press and came out a couple months ago. So do a little bit of everything, but the day-to-day job is running the accelerator program and keeping basically all the trainings running on time.
Very good. And last year, when we were going to do this information session, we blocked out an hour for it. And I remember we were a little panicked that maybe we're only going to get like 4 questions and run to 20 minutes and then run out. And last year at 59:59, we were still frantically asking questions. So I don't want to belabor, too much upfront information. But so I'm going to assume that folks who are on this have at minimum read through at least part of the TinySeed FAQ, that they understand that, our terms are 120,000 for the first founder, 60,000 for the second, 40,000 for the third, for between 10 and 12% equity, depending on the stage of your company. So those are the investment terms. But Tracy, you want to give folks an overview, really of what TinySeed does for people, what the accelerator year looks like, just what the program offers, because funding is not only, I would say not only a part of it, but it's a small part of it. A lot of companies that come into TinySeed don't need the funding, and it's more for all the other stuff that Tracy's about to talk about.
Yeah, like TinySeed, the funding is nice, but we're not just investors. Like, we really believe in the accelerator model. We really want to spend the accelerator year that people are in the program to take them. What is it that you say, Rob? Escape velocity. I like using that term. Take them to escape velocity. You're already going up, and we want to just accelerate that curve. So it's a year-long program. When people start the program, we start off with the first 3 months of what we call the TinySeed playbook. So we are devoted to SaaS. We are very focused on SaaS, and the playbook is the TinySeed's team's opinionated advice on some of the biggest topics that affect most businesses that we fund. So things like pricing and onboarding, and we do some design sessions, and we have things on M&A and fundraising. So the first third of the program is basically like education. And then we roll into bringing on mentors. We have some of the best mentors in SaaS as a part of TinySeed. We have both experienced founders like the Basecamp folks, Rand Fishkin of Moz and Spark Toro, Laura Roeder of, Laura Roeder is Magic Bell, right?
Meet Edgar.
No, Meet Edgar. Okay, sorry.
Paper Bell. Yep.
Paper Bell, that's what it was. Yes, Paper Bell. And we also have subject matter experts like April Dunford for positioning, and Samuel Hulick for onboarding. So we have a whole roster of mentors. We bring those in for mentor meetings throughout the year. We do Q&As with them. People get one-on-one help with these mentors. We also have a Slack group. We have a little online community. Hopefully this year we are going to be doing in-person retreats so people can get together in person and we can do a little bit of work, a little bit of play together and kind of form the connections between all the people who are in the accelerator program. Anything else I'm missing in terms of the program?
No, I mean, those are the details of it. I think, the high level is it's funding, it's mentorship and advising, and it's an incredibly strong network and kind of anything you want to do. We know people who have done it or who can give you advice on it or whom you can, we have vetted resources that you can hire. And then it's the community. It's a super tight knit community. I mean, much like Y Combinator before us, where you'll hear founders go in there saying, they found more value from the actual community than other aspects of it. I mean, we with this batch, this is our fourth batch we're funding. We're going to be north of 60 companies funded, and these are ambitious B2B SaaS startups, in the 6 and 7 figures of annual recurring revenue, and they're not venture track. They're not looking to become $1 billion companies. So they're just like you in the audience who's watching this, and I don't know of another place, MicroConf and TinySeed. MicroConf became kind of the worldwide hub for that, and TinySeed is the fund and the accelerator for that. And so if that's your track, it's the place to be. Mm-hmm. All right, we already have questions poured in, which is great. Udit Goenka, sorry about your name. My pronunciation, I'm sure might be Goenka. Can we be a part of TinySeed for the mentorship in the community without accepting investment or selling equity? Raising money is not our primary objective due to the stage we're at with our company. And I think, as I said before, I guess I didn't mention numbers, but in our last batch, about 75 to 80% of the companies didn't actually need the money. They didn't do it for the money. They were in the 30 to 100,000 MRR range. They didn't need our 120K. They did it for the mentorship, for the community, for the network, for all the other things that you're looking for. So the answer is no, we can't. We're not a nonprofit. We can't provide the mentorship and the network and all that for no equity, because we would be out of business next year, right? That's that. Paul Loeb has a question. I read on the website the funding can be used to pay the founder's salary at a rate of a typical software engineer. However, that amount is guaranteed to be greater than 120K. How does this work? Tracy, so we need to update.
Yeah, so there was
our old terms.
It's been updated. It was in Submittable. It snuck into the description for the last form. So I updated that this morning. We've updated our terms. So the salary cap is no longer set at a software engineer's salary in the closest city. That was too nebulous. It was too hard to kind of figure out every city, and there's lots of situations and whatnot. So we've actually updated the salary cap across the board for every previous company and future company to $250,000 US. So that's quite a high salary. Obviously, it's not a salary setting, is a salary cap. So your salary can be anywhere below $250,000 US. When you reach the point of that, that salary, and your startup is successful enough that you want to pay yourself more, then you can issue dividends. And that's kind of how TinySeed will share in your business at that point, because we would receive a share of those dividends because it's based on the percentage of ownership. So $250,000, hopefully that's large enough for anyone for quite a few years to not hit that cap. And then that cap exists so that the dividends get issued at some point for TinySeed.
Yeah, and for reference, at the venture-funded startups that I've been a part of or know of, usually $250K is what the CEO and the COO make after they've raised 5 or 10 million. So should be plenty for everyone. I think Paul's question is, he says, you're saying that you have a cap. I like, Tracy, that you introduced that word cap. It doesn't mean you have to pay yourself this. We have founders in our program who live very inexpensively, who pay themselves $2,000 or $3,000 a month, and all the rest they're investing back in their business, and it gives them a ton of runway. We have some other founders who have higher burn, personal personal burn. And so they pay themselves. I don't know that anyone's paying themselves a cap right now, but people are approaching that. And to Paul's question, we give $120,000 in funding, but what if you give yourself $250,000 salary? Well, you're going to burn through your money in 6 months then, unless you have revenue. That's the idea, right? That's why, we're not expecting you to have zero MRR when you apply. So you're a founder and you make the choice of what you pay yourself, but we will give you advice. And if you're burning 15 or 20,000 a month and you have no employees, like you're not going to last very long. So you just have to use your sense in terms of running your business. Mohammed Abu Shanab says, I do have already raised pre-seed funding. So am I eligible to apply? I'm based in the UK and looking to move myself with the startup to the United States. So the answer is it depends on what form your pre-seed funding has taken. If someone has purchased equity at a certain valuation, then our terms are they're pretty standard, and we will purchase at our valuation. And so if you're prior investors and you are okay with our valuation, great, that works. If you have raised a SAFE or a convertible note that converts at a future funding round, we are a priced round. So again, you and your investors would have to be okay with that equity converting at our price. The exception is a lot of SAFEs and convertible notes have a minimum funding amount to have a conversion. So they'll say, like, if you raise less than 250K, then it doesn't count as a convertible funding round. Or if you raise at less than 500K, that's usually the range. And we are obviously below that. So in that case, we have had, I believe, 1 or 2 companies come in with SAFEs or convertible notes, and we funded and they didn't convert on our round. But if they raise a future round or they sell, it will. So that's the gist. Mm-hmm.
Yeah, Dave? We have some of those questions in the application and kind of digs into some of those points. We added that this time around. And I want to say that those answers to your question, when you say like how I to the questions about where you're incorporated or any kind of those dig-in questions, nothing is set in stone. We're asking those questions so that we can follow up, do follow-up emails or questions later. So either in an email or in the first round of interviews or whatnot. So when it comes to those answers, if you don't know, you're not sure, you have questions, feel free to write those in and we'll follow up with you. But the application definitely is not set in stone. It's just meant to kind of start that conversation.
Yeah, that's the thing. It's, we get several hundred applications and we literally go through and look at, Tracy at least looks at every single one of them. And then A&R and I believe, it's A&R and I look at almost all of them, but there are a few that, don't make the first cut. So it really is, a lot of this is case by case where we look at it and we'll ask you questions and do you have a this and that, we have experienced a lot of edge cases. And so, I appreciate these questions. Next question, David Williams says, geographically and with the program in mind, are we at a significant disadvantage if we are based in the UK? It's David from Profitizer.app. So Tracy, there's 2 things here. There's a UK entity, right? David, if you're based in the UK and have a US entity, no problem. But then the second thing I think you might be asking is location and time zones. You want to address that piece of it? Yeah.
So when we raised, we're in the process of raising our European fund, which is specifically going to, I can say that, right?
Yeah. We're just starting. Yep.
I was just making sure. I was like, oh no, we're live. So yeah, we're raising this fund so we can have TinySeed Europe and UK. And so we can invest directly in startups who are in those time zones in UK who are not incorporated in the US. I'm very excited for that. Hopefully there'll be more information, say at the beginning of 2022, and what that looks like when the program will start, because it kind of depends on the fundraising. So that said, this fall 2021 batch is coming out of our second fund, which we just raised, which was 27 million, which is awesome. That was raised to invest specifically in North American time zones. And so that's kind of where this question, like our requirements come up. Rob, would you say, how would you say how strict that is? I don't know if I can answer that.
Yeah, I mean, specifically, we are looking for US and Canadian entities. And then I think someone's right now we have a mid-batch person who's probably coming in who is converting to like a US Virgin Islands company, but it's still US law and US related. If you are a UK limited company and you are not willing, or anything outside the Americas and are not willing to convert to some C-corp, an LLC, a Canadian entity, then you would want to wait for our European fund, which, TBD, 6 months, till our batch, soon. 9 months. Yeah, hopefully. I mean, it's next year. But if you have,
it's definitely next year, not like 5 years from now. We're trying to go very fast in that direction.
But if you are willing to convert, or you already have a US based, again, a Canadian, an America's based entity, we have tons of founders who live in Europe or live in other places. Yeah, so that your location is less relevant. The only thing is then time zones. I mean, we do schedule a lot of our calls between noon and 2 Central Time, and so that gets a little later on your time, but we have to cater to a lot.
It's up to the founder. Like in our current batch, we have some people that are in Thailand, which has been a very it's a hard time zone. So, they're opting not to show up live to our events, but everything that we do is recorded. It's put onto like a private founder dashboard so people to review later. So if you're in a time zone that isn't conducive to attending any of our live events, you can review it afterwards.
Right. So I want to remind folks to use the Q&A function in Zoom, because there's chat at the bottom. But if you go to the bottom of Zoom and look to the right, almost next to that leave button, there's a Q&A, and that is much easier because then producer Xander is able to track them and mark those questions when they're answered. Next question from Harris. Yeah, a lot are coming through. Harris Kenny, I'm happy to see you're open to funding a company that's relying on productized services to grow into a software company. Sure, that's 100% correct. Do you have any advice for how to talk about where companies like this are in the journey when applying for TinySeed? So we have a few companies who have a productized service in essence built on top of SaaS, but their SaaS revenue was at a minimum, it met our minimum bar in terms of having a software company already, and the productized service was either a way to grow revenue faster or just an additional revenue stream. So if you are a productized service and you have no software written, you wouldn't be a fit for us today. You're not a SaaS company. You are a productized service, which is different. If you are in the process of building a SaaS from your productized service, then build that, launch it, get some SaaS revenue, and apply to TinySeed. And the beauty is it's not every year now, it's every 6 months. And when we add Europe next year, there'll be even more opportunities to do it. But we do, productized services are nice because you can charge a lot for them. They don't scale as easily as software, but they're certainly helpful in the early days. Question, what are some key aspects you look for in companies that you select? So I will go first on this. The short answer, there's a really long answer, and we're not going to do that one. There's we have a Google Doc with 40 something bullets in it that we look at. I look at people, product market fit, and pricing. And so the people is we're talking to the founders. Do we think these founders are going to get it done? Have they a proven track record of shipping and getting things done? Do they take action, or are they victims? Are they sitting around saying, "Oh, it's not my fault that my product isn't working, or I got screwed here or there"? Or are they pushing it and getting it done? So that's the people. Someone asked solo founders. Yes, we fund a lot of solo founders. I think we actually fund more solo founders than 2-person teams, which is the opposite of most accelerators and most venture funds. So that was people. Product market fit is just that. Have you built something people want and are willing to pay for? And this is a spectrum. So, you could say at 2,000 MRR, I have some product market fit, and at 10 or 15K, I have a lot of product market fit. I mean, that's a general range, but it doesn't always hold true. I've seen companies with 30K MRR who really still haven't found product market fit, or found it with just a very small audience and are plateauing and then have to expand out. But definitely, if you have 0 MRR, you've shown that you haven't yet built something people are willing to pay for. You haven't proven that yet. And if you're at 5,
that's the main reason why we ask for people who are post-revenue, because we get a lot of questions asking oh, I have a pre-revenue company. Oh, I'm still working on collecting emails, but it's a really great idea. And this is the primary reason why that this aspect of what we're looking for is why we don't allow people who are pre-revenue.
Right. And here's the thing. revenue is not everything. Revenue is not the only signal. It's not like we sort on MRR and just make an offer to the top 10. That's not how it works. There really are a bunch of factors. And so people is one, product market fit is another, and pricing or price sensitivity is a big one that I look at. If you're selling to consumers and you're charging $9 a month and your churn is really high, you're going to plateau pretty quick, even in a big market. If you can have higher price points, if you have enterprise price points, and your churn is low, then you have less price sensitivity and you have more price flexibility. So those are my 3 Ps that I look at. Tracy, you have other things to add?
No, I've pretty much learned from you. So a lot of my experience in this is coming directly from you and Einar. I can't think of anything else I would add to that. Yeah, I think that was a pretty complete answer.
Awesome. Great. Nelson asked I'm just skipping around. Sorry, producer Xander. What startup I'll be back in the outline in a second. What about startups from Africa? We can register a company in the US and apply for the accelerator. Yes, we have actually had some African companies apply and have had conversations with them. So please do. Next question from Mihai Sava. Boy, how many questions are here? I don't know. I'll just start reading. Question 1. We've launched our product 2 months ago. We have signed a contract with one company to start using our product. In the agreement, we have fixed KPIs, which are key performance indicators, on how much we're going to achieve in terms of revenue for year 1, 2, and 3, along with the profit share. Can we count that against MRR in your application? I don't understand what you're asking. So maybe in the application, take your best guess, and then there's like a notes field or there's something, and just explain it, because I don't understand what the profit share is versus the KPIs. And this is a very specific question, so I don't necessarily want to, dig into it when we have 20 more coming in. Also, we have some MOU, which is something of a Memorandum of Understanding signed with 2 other companies waiting to use our product. Can we put that somewhere in the application? Yes, there's an open text field somewhere, right, Tracy? So this is the kind of stuff. Explain it, but explain it in detail. Like, explain really, like, is an MOU that they have committed to purchase and at what price? Like, we need to know all those numbers. Or is it they are considering purchasing if you hit milestones in the future? Then it might be hey, come back and apply later.
Yeah. And, and if there's any fields that seem to be missing, feel free to send me an email at hello@tinyseed.com, or you can message me directly through your submittable application, which is the platform we're using for the applications. I can grab anything that doesn't fit and I can stick it on your application on my end. So yeah, don't worry if things don't fit exactly. Like, I'm going to read through all your applications, and I'm not going to just judge them based on whether everything is the right place. I'm going to read through it like a human. It's totally fine. So feel free to put answers in a different place and say, hey, this refers to something else, or send me an email. I can switch it up. It's totally it's all flexible. It's fine.
Evan Howard says, we're 3 weeks into a PLG pivot from sales led, and I had never heard of PLG, so I was going to say, what's
PLG?
Well,
okay.
Here, I typed PLG into Google just to see, and here's the definitions it gives me. Number 1, Pretty Little Girl. Number 2, Progressive Librarians Guild. Number 3, Private Light Goods. Number 4, Play Golf Holdings PLC. So I'm thinking it's not these. Down about on the 5th result, it says, what does PLG stand for?
Product-led growth.
There it is. Product-led. I know. I got to it. It was a joke. I had to be entertaining. We're just answering questions. This is boring. All right. We're 3 weeks into a product-led growth pivot from sales-led, right? And you know how sales-led growth would be outbound and dealing a lot of sales stuff, where product is more going to be on the marketing side. We do have MRR, but it's low, and it depends. So what is low, right? Would you say apply now anyway, or wait 6 months and check back? We'd benefit more from the mentorship community funding now than in 6 months, but may not have impressive numbers. Oh, no problem, Evan. It's all good, man. It's just a fun little thing to chat about. Okay. I mean, my gut is always, honestly, it's like, if you're in doubt, apply, because what is it? Is it take you 20 minutes to do this? Like, you should know your MRR and your churn. Like, we don't ask for stuff that takes, it's not a 2-hour application. It shouldn't be a 2-hour. If it's a 2-hour application, honestly, you don't know your business that well. And so, in my opinion, if you're in doubt, you should apply, because you don't have much to lose. We've had many companies apply twice. And we had Cloud Forecast applied 3 times and got in on their 3rd time, right?
They've applied every single application. Yep. That should be clear. There's like every single application we put out, Cloud Forecast applied, was denied twice.
Yeah.
And they got in.
But they kept showing up, and to the people, product, market fit, and pricing, like, they kept showing up. They actually found more product market fit over the 2 years. They showed us that people weren't price sensitive, and the founder showed us that they showed up and were able to get traction. So the other thing is, these applications we will often have a conversation, and then if we don't wind up having a spot for you, we will frequently say, please, we know each other, we've seen each other face to face on Zoom. I kind of have an understanding of your business now. Send us your updates. Like, send us a monthly update and then apply again in 6 months. And by that time, we're even more familiar. I read I think I get 70 something updates from TinySeed and then other investments and then from non-investments. And we read them. Yes. So anyways, the apply, I think, is a little,
Xander just sent me a message in the chat that I answered a question.
Awesome.
Sorry about that. Xander, if you click on answer live, I think I would know that was going to be an answer live question.
All right. So did you answer a question that we should answer on the air?
I just asked something about, I think it was the typical, I'm making sure this is Xander, I'm so mad. You told me I could type answers. Anyways, what did I answer? I think that was the ARR question. Okay, I don't know anymore. So, anyways, I answered a question that was in the Q&A answer.
What does Christopher Mannion, what does a typical company look like, ARR, et cetera, when entering the program? Is there a size that is too big for TinySeed? No, there is not. And that's the typical thing is each batch has looked different. The first batch was earlier stage, second batch, people were further along, and the third batch, people, it's really a mix, and anything we say will, I think it's just too limiting. It's like last batch, we didn't accept anyone under 2K MRR, I believe. And it would be nice if from our perspective, we can continue to do that because, man, when you're at 1,000 MRR, it can take you 6 to 12 months just to get to 5K, right? You just don't know yet. But that's not a hard and fast rule. Let's say we don't get the applicants that we need and we want to fill the batch. Well, then we might, take some folks that are at a different spot. And again, MRR is not, it's one of several factors. It's not the only factor. Sean,
also, I want to jump in actually on the previous question when we were talking about some of the metrics. It occurred to me, I actually did something. We asked some things about metrics. We asked about what's your lifetime value and churn and whatnot. And I have this flashback to when I was running my last startup, and I knew what my revenue was, but a lot of the acronyms are still confusing to me. I was still building a SaaS, but I wasn't delved into those acronyms. I linked to some resources for how to calculate those. If you are new to kind of calculate all your metrics, if you have a SaaS that's running and you're new to that, feel free to either send me an email and ask any questions, or you can click through some of those resources if that's just something that is new to you. So I think that's the only part of the application. If you're not already doing those kind of tracking or not really aware of that side of the things, might take you some time just to do those calculations, but it's a really good practice to do too. And now that I didn't do it my last startup, it's one of my biggest regrets. So if you're not doing it, if you're not tracking some of these metrics, now is the time to do it. And then you'll need that for your application.
So when I said, if you don't know these numbers, you don't know your business very well, did you take offense at that? Were you like, "Arr"?
Oh, I just thought of myself, my previous founder. Yeah, I'd be like, I do know my business, but then it's like those kind of things. Now that I'm in TinySeed, and now that I know how valuable those metrics are, I look back and I can see previous Tracy didn't know, but current Tracy kind of understands that mindset. So just wanted to bring that up. I did link to some resources for those fields.
All right. Sean McAuliffe says, I'm a bit confused by the investment. You accept lower MRR companies, but offer 120K for, he says 10%, but our standard terms are 120K for 12%. That is our standard offer. And then he says, but you also mentioned 6-figure and 7-figure ARR. Can you elaborate as to what this might look like for an early stage company? So yeah, our standard terms are 120K for the first founder, 60K for the second, 40 for the third. We've never funded a 4-person company founder team, and I don't know that we will. We tend to be honest, we have a bias towards smaller founding teams. That's the pattern that we've seen in bootstrappers who get it done. Or usually it's 1 or 2-person teams.
And I love how this is the opposite of YC, because it is YC is multiple founders. That's one of the big, the ways that we look at the industry. That's kind of different than YC.
And I like that. A lot of things. Look, we have a lot of respect for YC. Einar went through YC. Your husband went through YC. We have connections there. And I've been a fan of Paul Graham forever. I've read his books when they came out. It's just a different model, right? I have a lot of respect for what they built, and certainly we are standing on the shoulders of giants. But we're kind of trying to go back to first principles, so to speak, and say what is best for bootstrappers. And so the bottom line is our standard terms, 120 plus 60 plus 40, and that is for 12%. And so low MRR companies, whatever that means, standard MRR companies, that's the deal. There are some companies that come in with, like I said, 6-figure, 7-figure ARR, and those we have a conversation with. And, so we do have a small amount of flexibility in our terms. And again, if you're in doubt, I'd encourage you to apply and have a conversation with us. We are really friendly people.
I try to take pride in my friendly and
totally
down to earth responses. Whenever an email comes into hello@TinySeed, that goes straight to me. So please feel free to fill my inbox with questions. I'm happy to answer them.
All right. Chase Fleming says, does company type matter, LLC versus C-corp? Tracy, do we care?
We don't care. If you're US, if you're incorporating in the US, it doesn't have to be like a Delaware C Corp. You don't have to convert to a Delaware C Corp, like all those things that their investors do. LLCs and C Corps are in any state works for us.
Venkat says, can you give a couple examples of where mentorship has made a practical difference to your founders? I'm smiling big because I can rattle off like 30, but all right.
No, you go first. Yeah.
No. Well, examples. You don't want to. Examples where the difference is to helping sell to enterprise, reducing the sales cycle would be good to know from dealplus.io. Tracy, you want to go first? You want me to go? Okay.
You got so excited that I was like, you started looking at me and I was like, no, this is all you, man.
Yeah. Well, it's like I'm so excited. So the TinySeed playbook is the first 7, give or take. It's like the first 7 modules of the program, and Einar and I walk through 101 and 102 level stuff on pricing and funnels and sales and M&A and fundraising if you decide to do that, and lead gen and a couple other things. And every time we go through the pricing one, you can look at the revenue graphs of, I'd say, about between 20 and 40% of the companies, if we look back to the month, the week that we do the pricing talk, within a few weeks, it's a, forget the expression, it's like a hockey, it's a hockey stick. It's a bootstrapper hockey stick, right? It's not, but it's incredible. And so we encourage folks that with that, we have had, and that's Einar and I, it's not counting the 40 mentors we have and the advice,
Yeah, I just introduced someone to Taylor Hendrickson, who does a lot with social, paid campaigns. So he was able to walk through with the founder through all of the paid campaigns that they had set up, and kind of debugged it and gave his advice. And the founder said to me in email, being like, this is so valuable. This is really amazing. And that's those are the kind of moments that make this whole thing worth it. It's really awesome to see, whenever we connect to a mentor, again, because we have these subject matter experts that are just really, really good in a specific area. It's really great to seeing what kind of results that someone can get when they can get that shortcut advice rather than kind of going through and trying to learn it themselves from scratch.
Right. And I mean, another example, you and I, Tracy, walked through a founder's funnel and each recorded a loom for him. And you recorded it from a design UX perspective or UI, and I recorded it from a conversion rate optimization perspective. And you and I both overlapped, but he implemented those and came back and was like, my conversion rate's up. I don't even remember what the number, it was ridiculous. It was 50% or something based on what you guys said. So again, that's our internal information, but our mentors, also have that. Venkat's question, he was saying helping sell to enterprises, reducing sales cycle.
That's
yes.
ANR, yeah.
I mean, that's Einar, that's, there's David Heller in batch 1 with Reambs doing enterprise sales. There's a huge number of our founders who are doing enterprise sales, and we have best practices. We jump in Slack, someone asks a question, it's oh, here's that thread where we addressed exactly how to do this 6 months ago or whatever. So a lot of good stuff there. Anil Gupta says, how does it work if there is already a company outside the US? Do we need to roll it up into a new company in the US, or can we have some kind of mutually exclusive agreement between the two companies? You can't just do a mutually exclusive agreement like a licensing or something. There has to be, because we own equity in an entity, and there can't be a legal way for you to funnel money out of that entity. And so I don't know. I'm not a lawyer. We have had companies with form another, they're in a foreign jurisdiction and they form a US or a Canadian one and they link that one owns the other one. It's a wholly owned subsidiary or something like that. So it's all possible.
Yeah.
And then
in these situations, like we have a lawyer on our end, you loop in your lawyer on your end. Like if we extend an offer, we can kind of figure out what's the best way to proceed forward. So these kind of situations aren't necessarily a blocker to being investment. It's just the start of a conversation. And we're happy to kind of work through what it would take for us to invest in you. And we can have that conversation at that point.
Luke Porter asks, we've been trading since 2013. That means in business for those who aren't up with the UK lingo. We're doing 118K MRR, but we want to grow and have help recruiting people to take the business forward. With us being around for so long, would we be considered, or is it more for initial startups that have been going for 1 to 2 years? Tracy?
I was going to say, that sounds great. I mean,
that sounds amazing.
The TinySeed program, like a lot of it is like why we're relying on not just investment, why we have the education and the component and all the mentorship and advice and all the hands-on work that we do with these companies, because a lot of people can roll in saying like, hey, we've been rolling for a long time. We don't see where our weaknesses are. And we can help you find those weaknesses and fix those weaknesses and hopefully get you to, again, escape velocity, get you to the next level.
Yep. So really the age of the company is not relevant. We do, that is not a factor, in the big spreadsheet or the big list of things we look at. We ask how long, but it doesn't really matter. The only thing it impacts, I think, is if your growth rate has been stagnant for years, we'll ask, why is that? And then how can we help you? We want to know how we can help you get out of that, because otherwise you shouldn't be selling us equity and we shouldn't be investing if we don't think we can actually help you break out of that. So good question. Udit asks, will TinySeed help us in raising a Series A in the future? And is the percentage of equity negotiable with TinySeed? So we have had, the answer is, if you want to raise follow-on funding, usually it's a pre-seed round. Usually you start with an accelerator round, then a pre-seed, then a seed, then a Series A. Series A's are like 10 million now. So the nomenclature has changed. But all that said, if you're talking about raising another $500,000 or $1 million in the future, or even more than that, yes, we will assist. We obviously don't do it for you. You have to create a deck and you're channeling investors. And we have had several founders raise additional funding after TinySeed.
25%, right? I think
something like that. Yeah. It's a large number. And that's the thing. TinySeed's terms, we want to give you optionality. If you never want to raise again, great. You want to run a profitable business, pull dividends out? Great. If you want to sell it for 10 million bucks, great. If you want to go on and raise a pre-seed or a Series A, or even, go on the venture track, cool. Our terms allow for all of that, and we will support, the decision you make. Phil Dearson says, for successful accelerator participants outside the United States, is there any help provided to form that Delaware Corp? What do we have for free as a TinySeed perk?
I mean, our lawyer has helped with finding other lawyers, helping people find like a local counsel for them.
Oh, Stripe Atlas.
And Stripe Atlas, of course, yes.
There we go. That was like a bump set. I was just waiting for you to.
I know, and I whiff it.
So we have Stripe Atlas.
I really like our lawyer. So
yeah, we can talk
he's
about
so helpful. I just want to constantly talk about how helpful he is. But yes, we have a Stripe Atlas benefit. So it's free incorporation through Stripe using their Atlas program. And Stripe has made that whole process like way simpler than it ever was before. Yeah.
Yep. And normally I believe they charge $500 for it, but because we have a partnership with them.
We have a free deal. Yeah. Mm-hmm.
Right. So several of our founders internationally who wanted to incorporate it used it. And it gives you a Stripe account and a bank account at, I forget what the bank is now, but, and then.
Might be Mercury, but don't quote me on that.
Yeah, I know. I think it changed, but it might be, we like Mercury. I like them.
Yeah, we do like Mercury.
Mm-hmm. Brian Crone says, we have a mobile health app that currently is direct to consumer, but B2B is an important channel we want to build out. Do we need B2B revenue before we should apply?
I want to say no.
I want to say, yeah. Again, I err on the side of applying. Mm-hmm. If all things being equal, if another health app applies and they have B2B revenue, they will have a notch above you. But usually all things are not equal. And so I would say especially, direct to consumer revenue is tough because usually churn is high, price points low. But if you have 5 or 10K of MRR and you can show us that there's an avenue to B2B revenue, I would say take the 20 minutes. Let's apply and, see if we have a conversation. Anil Gupta says, if we have product market fit in another country, does that qualify? We spoke to someone in the last batch. We didn't wind up making them an offer, but remember they had an app in a vertical, pretty tight vertical, and it was only in a country it was like Germany or something. And so we couldn't even read the website, right? We were like,
That's true. I mean, there's Localizer, who is largely in the Middle East.
That's right.
So
their product market fits there.
I mean, they're moving North America based, but they were primarily in the Middle East before applying to TinySeed.
Yep. And oh man, it's all these names. There's 41 companies. Legal.
It's just going to get worse.
Lexco.
Yeah, Lexco is in South America. Yeah,
Latin America. Their whole market is down there. So absolutely, yeah, we are not. We are product market fit country agnostic. All right, Marto Alberto del Cid Portillo says, I have a small startup generating $4,000 worth of crypto a month from NFT game scholarships. Would this be a startup for TinySeed, even if it doesn't have a software side of things? I'm not sure. I don't think this is B2B SaaS.
Yeah, I mean, so we don't want to be picky, but one of the reasons why we say B2B SaaS, definitely SaaS, and largely B2B SaaS is because of that education program, mentorship. Our expertise is all in that area. So we want to make sure that if you join TinySeed, we're actually able to help you. For things like crypto and crypto, we don't have a lot of experience in that. I don't think that would be a right fit for you. I'm not sure a lot of the topics that we go through would actually apply for your business.
That's the problem, right? If you have a crypto startup that's like a B2B crypto startup that is processing payments via crypto, or is it whatever, an exchange, just whatever, think of whatever B2B crypto app. Absolutely. If you're a SaaS app that involves crypto, we would love that. Most of us are into crypto in one way or another, right? On the team.
I'm married to an expert. Yeah.
Yeah. And ANR, jokes about crypto going to the moon.
Don't follow him on Twitter.
Hodling and all that stuff. So we're all about it. But if you're generating crypto in a kind of a B2C,
we just want to be able to help. And so that would be something that we would have a hard time, I think.
Right. It's like my advice on pricing and marketing funnels isn't really going to apply to you. David Shaw says, I'm founding a startup based in Northern Ireland, UK Limited. I'd be keen to register interest about the EU UK Accelerator, the EU Accelerator. Is it possible to register interest for that now, or would it be worth applying for fall 2021 batch and following the process from there?
That's a good question. I mean, I like to save applications in our application system and move them over if they make sense. So I've done that. We had what we call our mid-batch application that was up. And so there's people who can apply between application processes. And if they're not a good fit for mid-batch application, which is the whole thing, it's much higher requirements because it requires kind of breakout of our application model. If they don't match those requirements, then often it makes sense to hold their application until that next round. I don't have a system in place for this UK round. I would assume that would be the way that would go, though. I just don't have the application up. We don't have a timeline yet because we're still kind of doing the fundraising. So, I mean, feel free to apply and see, we're happy to have that conversation with you. Happy to see, talk to you if you do indeed want to incorporate, if you want to wait, if you just want to see what the application process is like, I don't think it would be that big of an issue.
Right. And at a minimum, tinyseed.com, enter your email so that you're on that, because we're certainly going to be announcing to the list, right?
The list is always first, the email list. So it's everywhere on our website, there is an email field somewhere. I think it's on /apply. I think it's in our footer or whatnot. So make sure you're on our email list and you'll definitely get that first announcement of the details of the program when it's set up.
Right. And if you apply, we'll chat with you as well. Kind of a follow-up question. Can you, I think from a different asker, can you talk more about your European fund? I'm not totally opposed to converting to a US one, but if that can be avoided, that's obviously better. Would the mentors and the rest of the program be exactly the same here? Well, they can't be because A, people only have so much time, and B, time zones become a little bit of an issue as we dig in. So
yeah, there's kind of going to be some overlap with mentors. This is another area, again, we're still figuring out because the European one is a bit far out. We're definitely going to be wanting to have European-based mentors because of those time zones, because of the expertise in that local culture, the local ecosystem. And the rest of the program itself, when it comes to the playbook, in terms of the cadence through the year, that would probably stay relatively the same.
I think so.
Because the playbook is just so good. It's something we didn't do for our first year. We introduced it for our second year. Second year went so well. And then of course we're doing it this third year. It still went really well. So of course we're going to replicate that across the rest of the accelerators that we run. So 1/3 of the year towards a playbook, 2/3 of the year, bring on those mentors, doing events and whatnot. That model will probably be the same between the two accelerators.
Yep, that's a good description of it. Next question. I have high personal burn, as you described it. Can't avoid that currently. To avoid spending all funding on salary, do you have requirements around how activities founders can be involved in? Specifically, can they also have a day job? And the answer is yes. Our requirement is that if we're going to give you funding, you have to be full-time. So you have to be at a point where that makes sense. And all founders who want to raise the funding need to go full-time. So if we get into different things where like there was one founder, there were two co-founders, and one didn't want to go full-time because they had this great consulting practice. And so we gave them the funding for one founder. And that's just how it works. We can't fund people to work a day job in essence, right? I mean, the whole point of this is that you are, gives you the leeway to focus full-time and to make some slightly bigger bets than if you were truly still bootstrapped.
And I want to say, I'm pretty sure the question wasn't asking this. It says, do you have any requirements on activities founders can be involved in? I assume that means outside the accelerator, but just to make sure everything that the accelerator plans, all of the calls we do and events and in-person retreats and whatnot, everything that TinySeed schedules is optional. We don't have anything. We have things that we're like, we really want you to win microconfs, like say microconf next year, we're going to have a retreat around that. That'd be especially a good one to attend because you have microconf, you get to see people in person, whatnot, but it is optional. So if there's anyone who is like, hey, I have a crazy schedule, I just want to review everything afterwards, that's actually totally okay too. We don't have time commitments in TinySeed, but of course, the more time you do spend with TinySeed, I think the more you're going to get out of the program.
A question from Timmy. We're a SaaS company. We are not yet profitable. Is that your criteria? We have no criteria around profitability. It is around revenue.
That's true.
Right. Yeah. And that is that is one criteria. Again, that is not the only. So I think a lot of companies who've come into TinySeed are break even or losing money and kind of funding it out of other activities. So we don't, if you have massive burn, I think there was somebody who had raised a big bucket of money and was burning through it and didn't have a lot of MRR to show for it, which is a bad sign, right? It's like, I've raised 500 grand and I'm at 5K MRR and I'm almost out of money. And it's like, well, it's not that you're not profitable. That's the problem, is that you spent a lot of money and didn't get any traction. That's kind of a signal. So thanks for the question on that, Timmy. Matt Zunert says, can you say a bit about how you think about unfair advantages? I feel like none of the official 4 unfair advantages trademark apply to me. He's referring to a microconf talk I did several years ago. So the unfair advantages for faster SaaS growth are just that. They're for the really fast growing companies, the Baremetrics, the Drips, I'm trying to think of who else was in that talk, like WooThemes, WooCommerce. I mean, these are companies that grew exceptionally fast. It's great to have one of them. It's not a requirement. We have a lot of companies coming in that don't have them. It comes back to that people, product market fit and price sensitivity plus the other stuff. Ranjit Ghoshal says, in terms of UK companies, we can use Stripe Atlas to have a US entity ? Yes. And if necessary, headquarters based in North America, you don't need a headquarters based in North America. Yeah, we have several folks who have no headquarters based here. So we have some bolded questions. Are these ones that we want to get to?
I bolded the ones that I want to get to, yes.
Okay, cool.
I thought that would make things easier.
Yeah. Great. Devin Patrick, what if we have product market fit for one segment of the market, small, medium-sized businesses or SMBs, but are going up market to the enterprise and haven't closed one of those deals yet? What do you think about that, Tracy?
I feel like that's worth an application, definitely. Especially if you have product market fit for one segment of the market, that's awesome. That's showing that you have need in that market. A lot of people join TinySeed, primarily selling, to smaller businesses, and then they move into doing enterprise once they get the advice and help and whatnot from TinySeed. So that's awesome.
Udit says, do you accept SaaS marketplaces or is it only SaaS companies? We've done around 4 million in sales in 3 years on our platform, now looking for help take it to a new level. So when we originally launched, we said subscription software. And we have absolutely talked to marketplaces. What we don't do is talk to marketplaces who have $400 in revenue, or marketplaces who have not only one side of the marketplace. Marketplaces are very hard to do, but if you've done 4 million in sales across it, I would then ask, so what was your revenue on that? Because if your revenue was zero, then you need to get to the point where you have some revenue. You just have to prove that there is, a willingness to pay for it. But it is not a non-starter. It is a starter for us. If
That's a good way to put it. Yeah.
You know what I mean? It's if you like the application, what are next steps? Oh, this is a good question. Mihai says, if you like the application, what are the next steps? Tracy reaches out, right?
Yeah. So, submit your applications to TinySeed through the Submittable platform. We start reviewing it just opened up yesterday. We're going to start reviewing, fully reviewing next week. First one I want to say is that you're going to get a response from us. So if it's not a good fit for TinySeed and you haven't if you haven't gotten a response from TinySeed, it still means you are in the process of being reviewed. You will get an email saying you're not a good fit at some point. So we're not going to ghost you. We're totally going to respond to every single application that comes in. If you are a good fit, then the first step is having a call with me. I call my calls application part 2. So I ask more questions that are kind of basic questions, like how did you get started with the company? What kind of led to the idea? What led to you starting this product? What else do I ask? I ask, what are some of the marketing channels that you're using? What are some of the marketing channels that you're looking to use in the next six or so months? So I ask them, totally easy questions. It's things that we want to know more about your business. They want to put them in the application, make the application larger, take up more of your time, especially since we know that there's going to be a large chunk of applications that are not going to be a good fit. Don't want to waste your time. So you go to a call with me. The next step, we'll be doing a call with Rob and Einar. Rob, do you want to kind of explain how that goes on your end?
Yeah, I mean, each of these is a filtering step, obviously. Some folks talk to Tracy and, don't make it along to the next step. But then Einar and we look at all the information that Tracy has put down and then look at your application. And then we ask questions that we have. We've seen.
Yeah, you got to dig into, I ask these broad questions and then you kind of dig into specifics.
Yeah, and we've looked at literally thousands of applications, and invested in, again, between my investments in private ones in TinySeed, I'm over 60, and that'll be over 80 here in the next month or two, right? That's a lot. It's a lot of companies. And so we're going to ask questions based on things we've seen in the past, but also I like to be educated about things that I don't know about. So it's oftentimes founders will educate us about a vertical or about, a method they're using or an approach they're using. And that, it can be intriguing to, I guess we have our impressions of how things should look. And we're just having a conversation about learning more about your business. And again, are you fit for TinySeed, and is TinySeed a fit for you? Can we help you? Do we think we can accelerate your growth? Right? Because if we can't,
we don't want to be those VCs that are just tell us how awesome we are. No, seriously, we want, we're here to really help take you to the next level. And we have to ask these questions also to make sure that we're a good fit for you.
Yep. Kim has a question. What do you look for as an exit for TinySeed?
So we had our first acquisition in the last batch, which was really awesome. We've only been around for a few years. And so it's really awesome to have, the first exit.
Yeah. I mean, it's kind of a hard question because certain founders don't want to exit. And so that's okay. We have someone in batch 1 who I think is going to start cutting dividends soon, which is fun. I think that, traditional VCs, it's if you don't sell for $1 billion, then it's a big failure because it doesn't return their fund and they need you to keep going. And we're not necessarily in that same boat, or we're not in that same boat, period.
Well, I was to say, if you want to know what kind of boat we're in, if you go to /invest on our website, tinyseed.com/invest, you can read our investment thesis, the thing that we give to investors in TinySeed that kind of explain why our model works and to get people to invest in us. So you can kind of read about the way that we look at the business on that side of things, if that's helpful.
Yeah. And I think it less of about exit goals, and I think more about revenue goals. If someone comes to me and they say, am I fit for TinySeed? One of the questions I ask is, do you want to build a 7 or 8 figure ARR SaaS company? Meaning, do you want to build a $1 to $30 million, mostly bootstrap SaaS company? If the answer is yes, then let's talk and figure out if you're fit. If you want to build an amazing $500,000 a year lifestyle business, great. I've done it. It's fucking amazing. Go do that. But you're not a fit for TinySeed. You're not going to be at the exit multiple or the profit that's going to make sense for any fund to invest in you.
Yeah, I got a question actually recently from someone asking if we invest in open source businesses, and it's that kind of leads, open source business I think is actually fine. It just depends again on that path. Are you going to go to the 7-figure business, or is it something that that's not your goal? Is that a goal or not? So I think that is actually applicable to a lot of different questions we get.
Yep. Last question, at least on the books right now. We have 4 more minutes, so let's crank through this one. Oh, and of course, now Xander's.
Xander's
Put more in.
Yeah.
All right, which is great. We will end on time. Caroline Reagan, thanks for your question. Can you elaborate on how you compare to other types of funding and what your value prop is? I could be out of touch with other investment terms, but it seems like your valuations are, lower. She kind of says lower than other options, which is true. If you want to be 2 people in a garage and get $10 million valuation with a laptop, then you should go to Sand Hill Road. You should go to Silicon Valley, right?
Yeah, we're different than traditional VCs, and therefore our terms are different. And the kind of things that we fund and the kind of things that we do are going to be different. And so the terms don't compare between this.
That's right. And so, if you're going to go the venture track, it's like you're on the track to be 100 million or $1 billion company, grow big or go home, raise funding every 18 months. And that's not what we are. And for our model to work, you think about, we are a 2-sided marketplace. We have to have terms that are acceptable to founders, which we've obviously proven by having a lot of founders accept our terms and be very happy with them. The terms themselves, the core of them were, Rand Fishkin, founder of Moz, left his venture-funded startup, came up with these terms for his next startup. So it's like, by definition, a founder came up with it for himself when he raised money. I wrote an angel check for that. And I looked at the terms, and as Einar and I were coming up with terms, we were like, these are actually really good terms. And can we model it so that it also makes sense for the other side of our marketplace, which is the investors who are investing in us? If we don't provide them a return, TinySeed goes away.
Yeah, I think it's worth saying also is like, because, when you're accepting terms from a traditional VC, those terms are based on the fact that you're now on the VC roller coaster. You have your seed, you're going to raise your A, you're going to raise your B, you're going to exit for $10 million. TinySeed's terms are set up so that you have a lot more options in the way that you grow your company. The terms are set up so you can just continue to run your business, don't raise any extra money, run your business forever, issue dividends at some point. Or they're set up to still allow you to raise money afterwards, or choose any of these other options. So it's kind of like the terms are also different because they give you more optionality what you need to do.
And could you go to a group of angels and raise money at a higher valuation than at TinySeed? Yeah, I think so, especially if you're if you have a really good network. Is the dentist down the street or the angel investor who's done 5 angel investments, are they going to have a year-long program with in-person retreats with 40 literally world-class mentors, like some of the best in SaaS in every respect, at your beck and call to drop an email or to have a chat? I'm exaggerating there, but and have weekly mastermind. We match you up with folks. We have our TinySeed play, but on and on and on. If you don't need any of that, if you don't need the mentorship, the guidance, the network, and you just want money, you should not come here. Like that, our value is so much more.
And I actually say we have a year-long program as compared to typically a 3-month program as well. And because we want to extend all this advice through a full year, rather than cramming into like 1 3-month sprint. Because it also really matters to us that good work-life balance matters a lot to us. And so we didn't want to do like a crazy 3-month sprint like some of these other accelerators. We have a full year to kind of like get these things in place to help you kind of watch you grow.
Yep. And then I think the last question we'll take today, because we're at the hour, but I like that it's Caroline's follow-up to that question. She says, can you elaborate on why I would choose TinySeed rather than crowdfunding or a revenue-based loan? And the first part is what we just said, is like crowdfunding and a revenue-based loan doesn't get you all of that, which again, in my opinion, is more valuable than the money itself. The other answers, though, is crowdfunding puts a heck of a lot of people on your cap table with small investments, usually unsophisticated investors, and it can be a challenge to manage over the long term, I will say. And also, if you don't have an audience, you can't just go and raise instant money as a crowdfund, right? It's like the people you've seen folks in the news doing it. The amount of
work that goes into that is when you don't have an audience is like almost near insurmountable.
Yep. And everyone, if you look at folks who raised money through crowdfunding, they all have these big followings. And if you have that, maybe consider it. Personally, we considered crowdfunding and decided against it for the reasons that there's a lot of complexity that it brings up.
And it also helped that we, our last fund, we were we raised more than
Right.
we expected, which was
Right.
awesome.
Almost 28 million. And then revenue-based loans, similarly, it's like, well, in order to get revenue-based financing with anyone, you need to be about 15 or 20K MRR, and you take out a loan, and then you're on the hook for that. Sometimes there's a personal guarantee, which is, very different than this. And sometimes there's not, but then a clock starts ticking, and then they start taking X% of your top line revenue out of the business. 6% is usually the number. With TinySeed, you as a founder, get to choose to keep the money in the business as long as you want. You take your salary up to that cap, and it's only when you take a dividend out above that, and you decide as the founder when to take it out. So if you want to grow your business and not pay our investment back for several years, you can do that. It's a flexibility. The founder's in control. And that's another, I think, big difference with RBF.
And like Rob said, we might get our first dividend check soon, but everyone has been focused on growing their business, and that's totally fine with us.
That was awesome. Yeah. Thanks so much. These are great questions.
So many questions. Yeah.
I know. It's super cool. We were coming into this thinking we did one of these last year. Surely there will be no new questions, but there were a lot of really good questions, and we appreciate all of you. I really hope that you consider applying at a minimum, going to tinyseed.com, getting on the list, and we look forward to hopefully being in touch.
Any questions didn't answer, just send me an email, hello@tinyseed.com.
Right.
Or DM on Twitter, anything. All that works.
All the stuff.